Okay, so maybe first of all, thank you to a big thank you to Kenneth for inviting me here and a warm welcome. I'm actually delighted to be here to share some of my views, especially with professionals in the technology space. I'm not a technology expert. I'm hoping to find some technology expertise from everyone here, but I'm obviously very happy to share whatever financial expertise that I have. So just start with a bit of introduction about myself. I graduated from law school some 20 over years ago, so started in law, did 6 years of private practice, both in Hong Kong and Singapore, and I'm also qualified in the UK. But some 15 odd years ago, UBS approached me and asked me to join them in Tokyo, and that's my first foray into the financial sector, and since then it's been 15 years. This is just a very brief summary of my previous experience. So I started with UBS, I joined Morgan Stanley, RBS, Mizuho. As you can see, almost every financial institution in every major country, I've actually worked with them. So I understand all their cultures and I understand the difficulties. And more recently, I think what I'm actually most proud of, and this is actually really my expertise, which is securitization. Whilst in Hong Kong, I was actually responsible for the world's first dim sum convertible bonds, and then subsequently the world's first dim sum asset-backed securities. So in case you don't understand, dim sum is actually a term for RMB 即人民幣 bonds, except that it's issued offshore out of China. And this is what we did. It was actually widely reported by both Reuters and Bloomberg, so very proud about these two transactions. But you know, everyone's going to ask, so why are we looking at technology investments when we have been so successful in doing traditional investments? Well, I think if you look at this, this explains a lot. This picture, essentially, 7 years ago, we actually saw one of the most catastrophic financial collapse in the world. A lot of very old companies like Lehman Brothers are disappeared today because they've actually gone insolvent. Bear Stearns, for example, another 100 over years old kind of bank has disappeared because it's been bought over by JP Morgan. AIG, which we all understand as one of the biggest insurance companies in the world, was pretty much nationalized by the US government because they lost so much money. So, but yet, within the 7 years, you can see from the chart below, all of a sudden, from 2011, we have very few unicorns. In the financial world, we call unicorns private companies that are worth more than $1 billion US. And all of a sudden, we look at 2015, it's just completely overcrowded. So this tells all of us, or actually is shaking up the entire financial industry because it's telling us that we really need to pay attention to technology startups because this is the new world, this is the new space. If we ignore it, we're going to be left behind. I think fintech, for example, has been a huge success. Even a lot of banks, traditional banks, are starting to worry about whether or not they are going to become a very strong competitor. Now, that is not to say that we will only do technology investments. So I actually represent a multi-family office. We have a few families, tycoon families in Hong Kong and in Southeast Asia. And as you can see, we still do traditional investments. First of all, real estate is a staple. We don't expect to stay away from real estate. However, it is very clear right now that globally, real estate prices are actually a bit pricey. One of the main reasons is because the easy monetary policies of a lot of different countries has caused real estate prices to go up. So we invest in real estate not just for the sake of real estate, but really with a long-term plan. So typically what we do is we do specialized real estate where we think we can actually turn it into a REIT, where we go for listing, we can actually produce a yielding product, then we make real estate investments. Finance, I think this is very common. I think in Hong Kong, for example, increasingly more and more people are doing finance companies, right? In fact, in 2011, there was 700 money lenders licensed. In 2015, today, there are close to 1,000 money lenders licensed. Now, why is this happening? Well, very simple. A lot of finance companies, they're doing kind of like second and third mortgages, loans, and the average yield of that is about 18%. After you net off all the costs of running a finance company, you still get something like 8%. Compared to putting your money in a bank deposit, obviously this is a lot more profitable and a lot better. And that's the reason why you notice that anyone who has any significant amount of monies in Hong Kong are actually going into money lending and finance, into finance itself. Now, but coming back to today's point, we are not going to ignore technology because we cannot afford to ignore technology. Now, we as a family office have decided to set up, and this is quite recent, a technology startup fund. The sole purpose of this fund is actually to invest in technology startups with a bias towards Hong Kong-based companies, right? Because a lot of the families that we represent are actually Hong Kong families. They want to see monies invested going back into Hong Kong, trying to give our Hong Kong companies and startups a chance to become global players and to become, and hopefully to become, and also to help Hong Kong economy in general. Now, in terms of technology startups, unfortunately, I understand that obviously in Science Park you do a lot of software and a lot of hardware technologies. We can't invest in everything. So just to be very honest, there are only two specific spaces that we're actually interested in. One is O2O, or we call sharing economy, and the other one is fintech. The reason for this is this: Hong Kong is a very, very small market. It's 7 million population. If you try to do anything and imagine that we're going to become a unicorn, meaning a US $1 billion company, is actually extremely difficult. However, Hong Kong can actually be used as a base, right? Because it is multiracial, finance is easily available, and we think that these two spaces, in fintech and in sharing economy, there is a possibility that you start in Hong Kong and then you actually become global, and then we can become really a major player in the world.